Tonight, we're tracking the surge of a crypto giant, AI-fueled market momentum in Asia, a major UAE bank making its return to global lending. And in our deep dive, the trillion-dollar showdown that could redefine leadership, loyalty, and control in corporate America. Let's get into it. Ripple, one of the world's most watched fintech infrastructure companies, has hit a $40 billion valuation after securing $500 million in fresh funding. The company, which built its name in digital payments and blockchain, is now expanding aggressively across digital asset products and global infrastructure. And the timing matters. With shifting political winds in the US and clearer regulatory direction on stablecoins, crypto firms like Ripple are positioning themselves for what they believe could be the most favorable era for digital finance yet. Across Asia, markets opened higher, fueled by a Wall Street rally after strong earnings revived confidence in AI-linked stocks. Japan led the charge, with major gains in companies tied to the artificial intelligence supply chain. Semiconductor support firms and chip equipment manufacturers surged, riding the renewed global appetite for AI hardware and innovation. In South Korea, Nvidia's memory supplier climbed as well, keeping the regional tech sector firmly in momentum mode, even as the broader market stayed cautious. Now to the UAE, where Mashreqbank is making a bold return to the global loan market for the first time in more than a decade. The bank is raising $1.5 billion in financing, tapping Asian lenders as part of a dual-structure facility split between 3-year and 5-year loans. The move is being closely watched in financial circles because it signals renewed appetite from UAE banks to re-enter large-scale syndicated lending, especially across international corridors. And now to the biggest fight in business right now, one that blends ego, strategy, shareholder power, corporate governance, and yes, a pay package worth $1 trillion. It's time for tonight's deep dive. Tesla shareholders meet in Texas this Thursday, and while annual meetings are usually procedural, this one could change the future of the company, its leadership structure, and the balance of power in corporate America. At the heart of it is Elon Musk's proposed compensation plan, one that could make his personal stake worth up to $1 trillion if performance targets are met. This isn't a salary, it isn't a bonus, it's ownership. 12 massive stock option tranches tied to growth milestones, potentially increasing Musk's control of Tesla to around 25%. Musk argues that level of influence is essential, not for wealth, he says, but for stability and long-term innovation. Without enough ownership, he's warned he wouldn't feel comfortable building AI and robotics projects at Tesla, including the autonomous robot army he has spoken about publicly. But not everyone is convinced. Norway's sovereign wealth fund, the world's largest, is voting against the package, calling it excessive and flagging concerns over dilution, government risk, and dependence on a single individual. Proxy advisory firms Glass Lewis and ISS also opposed the deal, arguing that the payout is disproportionate and in some cases leaves too much flexibility for the board to approve rewards even if targets aren't fully met. And that board itself is under fire. Several directors up for re-election have previously returned $919 million in compensation following a shareholder settlement that alleged overpayment. Critics argue this raises questions about independence and incentive, especially when many directors stand to benefit directly from Musk remaining in power. But Tesla's chair, Robin Denholm, has made one thing clear. Approval isn't just about rewarding Musk for past performance. It's about keeping him at the company. In a strong worded letter, she told shareholders the alternative could mean losing his vision and talent. Complicating it further is Musk's expanding universe. He leads not only Tesla, but SpaceX, Neuralink, the Boring Company, X, and now XAI, his rapidly growing artificial intelligence startup. This has triggered a new question. If Musk is building the future of AI outside Tesla, should Tesla invest in XAI? Shareholders will vote on that too. Even Musk says it's not his decision, but also admits if it were up to him, Tesla would already be invested. Critics say this blurs the lines between opportunity and conflict, asking Tesla investors to fund a competitive founder's parallel empire. Supporters call it visionary alignment. Detractors call it self-dealing. Either way, the outcome sets a precedent far beyond Tesla. Because this isn't just a vote on compensation, or strategy, or stock ownership. It's a referendum on the future of founder power in public companies, the new rules of loyalty, and the price of genius. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.